Welcome back to the channel, fellows. So as you know by now, on this channel, we give valuable information on finance, on investment, as well as personal growth. If that sounds good to you, kindly log in to this channel. So without further ado, let's jump into today's topic. So today we're going to be talking about stocks. We're going to be talking about the core investment product that could, skyrocket your wealth, that could increase your wealth, that can increase your valuation. I'm going to be talking about stocks. Stocks are shares of companies or corporations that are publicly traded in the stock exchange market. When a company wants to generate funds externally, they go public to be traded. When you buy stocks, you are buying ownership stake in a publicly traded company. So before having interest on any stock, you should do your research. You should do your research on the valuation of the company. Then after you have done your research and you are satisfied with where the company is at and where they are coming from, then you can anticipate that, okay, this particular company can grow your wealth, can grow your initial capital before you try to purchase that stock. So in a situation for growth stock, you have your stock, sit down there, and over time it increases its value. So if you have a pressing need for it, if there's something that you need to do with the money, then you can sell. But in dividend stock, you can just have your stock, and periodically your stock is entitled to dividend, which they could pay you by annually, quarterly, or monthly, depending on the company. So you can take advantage and leverage on these two types of stock just to grow your wealth. So as interesting and attractive as stocks are, it has its own disadvantage. So the disadvantage of stock is that while you are anticipating or believing that the stock would go up, it may crash down depending on the general sentiment in the stock market. So a stock can go down at a particular point in time, thereby leading to losses. But you've not lost entirely until you sell the stock. It's after you sell the stock at a loss price that is when you will say that, okay, you lost in your investment or in you holding a particular stock. So if it goes down, you leave it. Over time, history has proven that over time it fluctuates, it goes down, up and down. So if you leave it, if you are patient enough, if you are grounded enough with that company, over time it will tend to go up as well. So stocks are high risk assets. As it is highly profitable in the long run, it's a high risk asset because as I said earlier, there's a possibility of the stock crumbling or going down. So we are going to be looking at two types of stock. You have the growth stocks and the dividend stocks. So there has always been this argument on the preference between growth stocks and dividend stock. So we'll do the comparison and we'll see which one at the end of the day is more enticing or more juicy depending on your investment style. So you look into them and you can tell me in the comment section which one is preferable by you. Possibly I could tell you mine as well. So growth stocks earnings comes from capital appreciation. That is when the stock price increases. That is, if you buy a stock at a particular amount over time, if the stock price increases, if it's something that you want to trade or you are not holding for the long haul, you could decide to sell it, get your profit or your earnings from that stock. While in dividend stocks, you get income from dividend payment and a little capital growth. So you get income, be it monthly, quarterly, or biannually, depending on the company as time goes by. Growth stock is best for people that seek long-term capital gains with volatility. While dividend stock is for people who want regular income with a lower risk. So over time, with dividend stock, you get income that is paid at interval. That will be like a cushion for you having your wealth stored in a particular company. You have something that you are holding on to over time. So another point is why growth stock will invest their profit in the companies. Dividend stocks provide steady income in addition to potential increase in capital appreciation. So for a growth stock, all of the earnings or profits made is reinvested into the company. It's on that reinvestment that the value of the company tends to, go up. It's like them expanding their operation, so you can see a higher increase in the valuation of the company compared to dividend stock. So growth stocks are mostly growing companies, which shows high risk and volatility, while dividend stocks are large corporations with lesser risk. So your growth stocks are emerging companies, they are growing companies, they are companies that are still trying to put their on the ladder to be at par with the large corporations. So they are majorly reinvesting all of their earnings and profit back into the business to upscale their growth. So but your dividend stock, which are large corporations, they are there already. They are just doing what they are doing to make profit, to keep their profits level very secured, while they pay their shareholders dividends from profit earned. So the steady flow of income in dividend stocks can help investors cover living expenses or invest in other opportunities, thereby enhancing their overall financial position. Because when you are being paid dividend, depending on the stocks that you own with a particular company, if it's in large quantity, you get very huge dividend payments at the end of the term. So you can also use that dividend that you are paid to invest on other companies, to invest on probably a startup or an emerging company too. So that would ultimately, broaden your investment portfolio. So I know what you'll be asking by now. You'll be like, oh, all of these stocks, how can I partake in it? How can I own a share? How can I go about it trying to own a share? Well, good luck for you, because as it stands now, you don't need to go to any company to own a stock. You don't need to go to the bank to own a bank stock. You can just do that at the comfort of your home with investment platforms. So platforms like RiseVest and Bamboo, etc., can avail the opportunities to have access to stocks and exchange traded funds in Nigeria and abroad. So you can be here in Nigeria and invest in stocks in the US or wherever it is that you have interest of investing in. With these applications, you can invest in Nigerian stock, you can invest in Canadian stock, you can invest in American stock. So that is all you need to secure your investments. So for the most part, investors prefer dividend stocks to growth stocks. Example of dividend stocks are Coca-Cola, Total Energies, Presco, etc. Exchange traded funds that pays dividend as well include JP Morgan, ticker symbol JEPI. We have Vanguard with ticker symbol VWMI, etc. So you can own any of these stocks and just be rest assured that, be it monthly, quarterly, biannually, or annually, there's a particular amount that is paid into your account just for owning that stock. I know it sounds good to you, right? Fund. So I want to believe that you've gotten value from this video. So kindly do me a favor and smash that like button. Please hit the like button, subscribe to the channel.